If you like the idea of working in commercial real estate, one of the biggest benefits of being in this industry is that there are so many paths for you to choose from, each of which can give you a very different experience on a day-to-day basis. But even though this tends to be a net positive overall, the specific part of the industry that you choose to pursue is one of the most important decisions that you'll have to make, and going down a path that's not the right fit can have a lot of negative consequences in both the short and the long term. So to make sure you're going into the job search process well informed and making an educated decision about what kinds of roles you want to pursue, in this video we'll walk through the 3 main career paths within commercial real estate and where you might fit in best based on your skills, your interests, and the level of risk you're willing to take on. So to step back and take a look at the commercial real estate industry at a high level, there are really 3 main categories of roles, with the vast majority of jobs in this business falling into one of these 3 buckets. And the first path is working in commercial real estate operations, where you're either driving or monitoring the performance of deals. Career paths that fall under this category include roles in asset management, portfolio management, and even loan servicing, where your main responsibilities involve working on the existing properties a company owns and either managing or analyzing the performance of those assets, and then often reporting those results to internal leadership or third-party equity investors and lenders. These types of roles tend to be best for people that consider themselves optimizers or like to see projects through to completion, and also people that tend to get a lot of satisfaction from seeing growth or progress over time related to their work. These also tend to be some of the least forward-facing roles in the industry, so if you consider yourself more of an introvert and you don't want to spend the majority of your time trying to build new relationships and trying to sell your services, and you'd rather focus on management and reporting with familiar teams in familiar markets, these types of career paths can be great options to consider. These types of opportunities also tend to be some of the most low-risk jobs in the business, since for companies with existing real estate portfolios, the demand for asset managers, portfolio managers, and loan servicers isn't directly reliant on deals getting done in the market, and when transaction activity slows down and rents are dropping or vacancies are increasing, the people that can help companies improve operations, negotiate loan workouts, or help analyze portfolio performance overall can be some of the most in-demand professionals throughout the entire industry. Now, with this comparatively low level of risk also often comes relatively lower compensation packages, since in many cases you're going to be relatively far removed from the purchase and sale of commercial properties in these roles, and even though you may be responsible for driving growth of a portfolio, bonuses in these types of positions do often tend to be on the low end of the spectrum. Ultimately, if you see yourself as relatively risk averse, you're willing to leave a little bit of money on the table in exchange for a stable and dependable paycheck, and you also take pride in optimizing performance and leading projects through to completion, roles in operations are where you'll want to be. Now, if a career in operations doesn't sound like the right fit for you, the next career path to consider is much more focused on transactions directly, and this is working in a deal sourcing role. Career paths that fall under this category include positions in acquisitions, working for an investment or development firm, roles in loan originations, working for a lender, or even in-house capital markets positions where you'll be raising debt and equity internally to help capitalize a company's deals. Unlike roles in operations, these positions are very focused on getting deals done, which make this part of the industry a great fit for people that like to work on individual projects in short-term sprints without the continuous responsibilities of managing property performance over a sustained period of time. These positions also generally require a lot of relationship management on a day-to-day basis, with outbound outreach to brokers, clients, and investors making up a significant portion of your responsibilities, especially as you move into more senior level roles. And since these jobs also tend to be extremely transaction focused, these are also usually going to come with significantly higher levels of risk than you'd see in operations. This means that when transaction activity slows down or capital in the market dries up, these tend to be some of the first positions to get cut during times of market distress. But on the other side of the spectrum, when times are good and market activity is strong, these roles are usually going to offer a much higher income ceiling than you'd see in operations, with many of these jobs including compensation packages that are heavily based on performance and the amount of deals that you can close in a given year. The bottom line here is that if you're comfortable with a slightly higher chance of losing your job during times of market distress in exchange for more income upside during good times, you thrive on building relationships and maintaining those connections, and you want to work on new projects consistently rather than managing the same projects over a longer period of time, deal sourcing roles can be a great place to be. Now, if operations isn't your thing and deal sourcing roles don't quite fit what you're looking for, you may want to consider working as an intermediary where you're facilitating transactions as a third party on deals. This path primarily consists of roles in brokerage, including investment sales, mortgage brokerage, or equity placement roles where you're not going to be working in-house at an investment or development firm, but instead representing other companies to sell or finance deals on their behalf. For people that thrive on change and constantly want to be working on new projects, one of the best things about this part of the industry is that the time period that you'll work on each deal or project tends to be relatively short-lived, and you'll likely be working on dozens of different assets in any given year, making this part of the business great for people that thrive on change. These roles also don't include much or any operations management and primarily act as sales-focused positions, meaning that your day-to-day responsibilities in these jobs are going to be centered around bringing two parties together to get deals done, and with that, intermediary roles also tend to be extremely heavy on business development and relationship management, and in most cases, you're going to be spending a lot of your day on the phone, in meetings, or making other outreach efforts to find and keep clients. These also tend to be some of the highest risk roles in the industry, and when transaction activity slows or market volatility increases, commissions can fluctuate a lot from year to year. So while there might not be an income ceiling in 100% commission-based roles, when you move into mid and senior level positions in this part of the industry, there's also no base salary to fall back on when times inevitably get tough. Ultimately, if you're very comfortable with risk, you want to maximize your compensation potential as much as possible. You want to operate based on a pure pay-for-performance model as soon as you can, and you also consider yourself a natural relationship builder and connector. Working as an intermediary could be a great way to both utilize your existing skills and to achieve your goals as quickly as you can. Now, obviously, there will be exceptions to these, but in my experience, these are the things that you're very likely to see in each of these three career paths as a commercial real estate professional, with each providing a very different experience overall. And even if you're not able to land the exact job you're hoping for in your first job in the industry, prioritizing getting on the right overall track will make sure you're still doing a lot of the activities that you want to be doing on a day-to-day basis, and you're not going to be taking on a role that you're ultimately going to hate. And if you want to learn more about commercial real estate career paths and you want to build the modeling and analysis skills you'll need to break into this industry, as always, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break Into CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the channel on the differences between different commercial real estate career paths, make sure to hit the like button and let me know. And let me know in the comments which of these three paths you're looking to pursue and why that's the case. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.